Bloomberg World Headquarters in New York to our TV and radio audiences worldwide. I'm David Westin. Welcome now to Balance of Power, where the world of politics meets the world of business. On the brief today from Sao Paulo, Julia Lecce on President Trump's imposition of steel tariffs on Brazil and on Argentina. Birgit Jennen from Berlin on new stress being placed on Chancellor Angela Merkel's coalition. And Tom Orlik from Washington on Chinese manufacturing PMI numbers surprising to the upside. So, Julia, let's start with you. We woke up this morning to learn that we're going to reimpose or impose for the first time tariffs on steel from Brazil and Argentina. How is that being received down there in Sao Paulo?
It was a bit of a surprise to everyone all around when the tweet hit this morning. President Bolsonaro was leaving the presidential palace right after it. He didn't really want to comment. He said, give me a bit of time to talk to the economy minister. Maybe I'll call Trump. I have an open line of communication with Trump, and we'll sort it out. We expected initially a negative market reaction. It hasn't been the case. Steelmakers opened the day lower. They're already trading higher. The currency is also higher, but it has kind of taken over the conversation here in Brazil.
Well, you mentioned the currency, which was critical to what President Trump said he was doing. He was saying basically Brazil and Argentina were devaluing their currency, and that was taking an unfair advantage in trade. What, in fact, has the central bank been doing down there?
So the Brazilian central bank has actually been trying to prop up the currency. The currency has slid to a record low over the past couple weeks due to several factors, including the dollar being strong worldwide. So a lot of it is not really tied to Brazil. There was some disappointment with the oil auction here. So there's a lot of factors behind it. Argentina, as you know, had the election earlier in the year and has had currency controls for a while there. So they're not really doing anything. The central banker is speaking right now at a lunch and has just reiterated Brazilian real is a floating exchange currency, and we only intervene when there's dysfunction in the market.
Julia, give us a sense of how important steel exports are from Brazil to the United States.
It is one of the biggest export products between Brazil and the U.S. It's the second biggest, trailing only oil. But in terms of Brazil exports as a whole, it's not a lot. If you compare it to what Brazil exports in agricultural products for China, which is believed it's kind of tied to this tweet this morning, it is over 10 times less than what we export to China.
Okay, thanks so much to Julia Lecce reporting today from Sao Paulo. Now let's go to Birgit Jennen in Berlin, because I at least was surprised over the weekend with what happened to the coalition there, particularly the SDP. Explain what happened.
Well, the SPD has basically voted for a very left-leaning party leadership. And this came somewhat as a surprise, because this leadership actually wants to call into question the Grand Coalition. And they have basically said that they want to renegotiate the coalition contract. And Merkel's CDU has said there's no way we are going to reopen the contract, though Merkel herself is obviously interested in keeping this coalition. And her spokesperson has just today said, with no opening of the coalition contract, but maybe there's a way to basically start with some talks on top.
So Birgit, the market reactions seem to assume that, in fact, if there's a move to the left, as it were, that this might really affect the stimulus, the austerity plan going off of stimulus and really having fiscal stimulus. Is that right?
Well, yes, because one of the reasons and one of their demands is that basically the government should give up the balanced budget policy. And it's basically the CDU, Merkel's party, which says on the record it's a fetish we are cherishing. So the SPD says, look, there is enormous need for investment in infrastructure, in education, and for us to say in this government, the government should give up the balanced budget.
So can Angela Merkel move, I'll put it, to the left, sort of to the SPD at this point, without losing her base in the CDU?
Well, that's a very good question, because really the CDU has already bent over to keep the SPD in government. They have introduced a series of left policies ranging from basic pension to minimum wage. So the party base of the CDU says we did enough. There is no way we are going to make these major concessions. So there is really only a limited room for maneuver.
Okay, thank you so much to Birgit Jennen reporting today from Berlin. And now let's go to Tom Orlik in Washington. Tom, we got some numbers out of China that were encouraging on the manufacturing front over the weekend.
Yeah, that's right, David. Over the weekend, we had the official manufacturing PMI and we had the Caixin manufacturing PMI. So two of the earliest and most watched gauges of how China's factory sector is doing, and they were both pretty encouraging. The official PMI moved back above the 50 mark that separates improving from deteriorating conditions, and the Caixin PMI bounced even higher. The important caveat that I would add is that there could be some seasonal effects at work.
Well, that was just going to be my question. Is this seasonal? Is this a one-off, or is this a response to perhaps stimulus from the Chinese government?
So there's been stimulus there, David, but as you know, that stimulus has really been very drip feed, very moderate. I don't think that's what's going to be driving a rebound at this point. Our feeling is that there's some seasonality in these numbers. A big October holiday maybe was a drag in the previous month. The November numbers could just be reflecting a bit of a one-off as factories return to work. The other point I would flag is that some of the structural problems China faces aren't going away and indeed are looking a bit more serious. If we look at the price data in the PMI surveys, what we're seeing is that factories are facing a slide in their output prices. That's going to drag on profitability, and that's going to be a problem for China heading into 2020.
So, Tom, encouraging numbers out of China on manufacturing. At the same time, just a short time ago, we got ISM numbers for the United States, which went the other way, south of 50 and going in the wrong direction.
Yeah, that's right. So some disappointment in the ISM numbers, pointing to a deterioration in conditions, and a little bit of a surprise given that the end of the GM strike and some encouraging news, or at least tentative signs of a ceasefire in the US-China trade war might have been expected to cause a little bit of a bounce higher. I think what this number underscores is that even if we do get that US-China trade truce, the problems in the US manufacturing sector are not going to be easy to fix, and they're not going to go away quickly.
Okay, Tom, thank you so much. Always a treat to have you with us. He's the chief economist at Bloomberg Economics. And now it's time to get a check on how markets are reacting to some of today's top stories. Joining us now is Abigail Doolittle. As I said to you earlier, I cheated a little bit. I read your note, so there's a little ISM there, but there could be some trade.
I think that there's a little bit of everything today. We finally have something to talk about. But yes, definitely a little bit of ISM. And it's interesting that divergence that you and Tom Orlik were just talking about between China and the U.S., because the U.S. right now, the ISM manufacturing in contraction for the fourth month in a row, the longest stretch since 2015 to 2016, sitting at the lowest level for the longest period of time, going all the way back to the financial crisis. So that's a little bit worrisome for investors, that perhaps there's going to be some sort of a prolonged manufacturing contraction as we're seeing, and stocks selling off on that today. Right now, David, the worst day in almost 2 months.
At the same time, at least some stocks are being hit by this imposition of tariffs on Brazil and Argentina, for example, the steel companies.
Well, the steel companies are actually getting a little bit of a lift. The last time, yes, because of that tariff going back onto steel for Argentina and Brazil, with President Trump's tweet that you were talking about around the currencies being devalued, hurting the American farmer. But of course, there was another tweet that came out from President Trump this morning, and that seems like a little bit of a risky gamble, or gambit, as you would say, in terms of his saying that if there's no deal, the U.S. will increase tariffs on China. Right now, we're getting pretty close to that December 15th deadline. If those tariffs go into place, again, I'm not sure that that's priced in. So you're seeing a little bit of wobbly action for the stock, for U.S. stocks today. But as we know, day by day, anything could come out.
When it comes to phase one of the U.S.-China trade, I think day by day is exactly the right expression. It's gone up and down and all around. Okay, many thanks to Abigail Doolittle for that report on the markets. Coming up, we're going to take a look at Hong Kong. Protesters took the streets again, even after that victory in the election. What does it mean for the U.S.-China trade negotiation? We're going to talk with Stratfor's Matthew Bay about that next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. There's no sign that the Hong Kong protests are going away anytime soon. Police and demonstrators clashed again over the weekend after President Trump signed the bipartisan Hong Kong Human Rights and Democracy Act into law. And the Chinese government promised retaliation against the United States. For more insight, welcome now Matthew Bay. He is Stratfor Senior Global Analyst coming to us today from Austin, Texas. So Matthew, thank you so much for being with us. So put together, if they do fit together at all, this statute that was passed now in Washington to really ride herd on Hong Kong and China with respect to protests, and the phase one, so-called phase one agreement in the trade negotiations. Does one put the other in jeopardy?
I think it does. I mean, when we look at the U.S.-China trade talks, we already know that they're complicated for just the trade issues themselves. Once you start looking at the non-trade issues, whether that be looking at, Huawei export controls, which we also have some news on from the last month or so, and then now you look at the Hong Kong protests in the U.S. putting into place it's the new bill, and then of course China already responding by doing a couple of measures against the U.S. today, announcing those. Those are definitely two things that are now getting blended in a way that they hadn't been, say, a month ago or 2 months ago, especially when we talk about Hong Kong. So it is making that last stretch to try to get a phase one deal even more difficult, especially ahead of December 15th, the deadline.
Matthew, as you say, Beijing immediately said we're going to retaliate if the United States goes forward with this statute. At the same time, the first actions they've taken don't involve trade. They're sort of NGOs that they're going after, like Human Rights Watch. Does that give you any assurance that maybe they won't mix it up with the trade?
I think they're trying to, definitely slow it down to the point where they don't want the two to mix too much. I mean, obviously, Hong Kong issue itself is a national security issue for China, but at the same time, they do want to have a deal made at some point. That's why when you look at, things that would disrupt NGOs from doing activities in China, that's something they've been already doing for several years now. Preventing U.S. military visits to Hong Kong, that's something that they've already done a couple times this year. So these are things that they know and they've done in the past. It's just the low-hanging fruit. But if we start to see the U.S., expand the scope of what it actually does and starts implementing the law, that's when China could actually make more stringent moves against the U.S. that are more retaliatory and could go after trade issues themselves.
We're talking with Stratfor's Matthew Bay. Let's turn to a different geopolitical issue, because later this week, as you well know, OPEC Plus, I should say, is having their meeting. What do we expect to come out of that? Because there's some move afoot to really cut further the output quotas.
Well, I mean, that's the great question, and I don't think it really matters so much. I mean, it does for markets, obviously, but when we talk about the geopolitical implications, I'm not sure it matters so much whether or not they extend the deal either today, or this week, or in March or whenever. The point is that Saudi Arabia is driving them to extend the deal at some point down the road. It's going to happen. The question is, when do they actually seal that final deal? Saudi Arabia's imperatives, when you look at the Saudi Aramco IPO, you look at what they're trying to do domestically, their spending commitments, they definitely need to have this deal extended. They cannot have the Saudi Aramco IPO fail to the degree where the stock price once it starts being traded, just declines dramatically. So they are going to put a deal on the table. They're going to push for a deal, and eventually I think OPEC Plus will get the deal. It may not necessarily have those the cuts extended beyond March by sealed at this agreement, at this meeting, but it's definitely something that's going to be happening down the road.
The other major player appears to be Russia in that equation. Where is Russia in this? Are they inclined to support Saudi Arabia in extending the deal?
I mean, they're going to take a wait-and-see approach. They always do that. They're not going to quickly jump on to whatever Saudi Arabia says, but they know they have an agreement with Saudi Arabia that's implicit that this is going to be extended to some degree. Russia has no interest in doing it, accelerated. They are comfortable with oil prices where they're at. They're not looking at they don't have any kind of like a Saudi Aramco IPO type thing that they're managing. So they're definitely going to take a wait-and-see approach, and they're going to, continue to follow through with their commitments whenever it feels right to them, and sometimes that's going to be following them, sometimes that's not going to be following them. So they're definitely going to be amenable to an extension, but they're not going to be bending over backwards to get one. We're
talking with Matthew Bay of Stratfor. Matthew, finally, let's turn to U.S.-EU relationship, European Union relationships, as the President of the United States heads over to London for those NATO celebrations. There's a big issue pending right now. Maybe as soon as today we're going to hear about possible sanctions involving the French so-called digital tax. Explain that to us.
Yeah, so earlier this year, France put into place a digital tax on U.S. or global tech companies that were large, that largely hit U.S. tech companies because the U.S. tech companies are the largest. And then the U.S. started a Section 301 investigation on France in particular, the tax they put into place, and that investigation is due to come out by the United States Trade Representative today, is what they have said so far. If they move forward with any kind of economic penalties against France, that can include tariffs, it can include other measures, and we're watching for that that. The fact that they're actually making this report public means that they're probably going to be finding that it's an affirmative, and they're likely to move forward with something. The question is, what is the scope, particularly as you already have the United States putting into place large tariffs on the EU as it relates to the Airbus dispute.
Matthew, is France a little bit on its own in this? Because we talked with Margaret Vestager, the commissioner responsible for competition law and things like that, last week, and she made it pretty clear she'd like a global solution, at least a European-wide solution, not just France. This is part of what she said.
Right. And I think
it would only be fair that we pick it up again if a global solution is not possible. Everyone who plays by the book has absolutely nothing to fear. That goes without saying. But we have an investigation into Amazon's use of data in their dual role, both as host but also as competitor. And we're asking a number of questions to Apple and to Facebook right now.
So is President Macron of France being a team player with the EU right now when it comes to the digital tax?
I think they're willing to actually get to some sort of agreement moving forward. They've said that they will repeal their own tax once there's either an EU mechanism or an OECD mechanism or an agreement around what that tax should look like or what a digital services tax should be looking at. So I think they're going alone first, but I don't think they're definitely not the only ones going alone. The UK has thrown out the possibility of putting their own digital services tax outside of Europe. So is Canada. So this is something that globally, there's a lot of momentum behind, and the U.S. is going to be the one that's going to be hit the most by that, just given the fact that U.S. tech companies are the largest.
And finally, Matthew, give us one other issue, EU-U.S. agenda right now that they will be taking up in London when it comes to trade.
When it comes to trade, they're definitely going to be talking about potential auto tariffs down the road. I mean, obviously, the Section 232 deadline for the U.S. imposing auto tariffs has already passed, but there have been rumors about the U.S. launching a Section 301 investigation just around broader EU trade issues, and that could give legal justification for things like tariffs just on the auto sector, or much broader than that. That's something that's definitely be coming up under discussion.
Okay, Matthew, thanks so much for joining us today. That's Matthew Bay. He's Senior Global Analyst at Stratfor. And now we finally are going to turn to Mark Crumpton, whose mic is now working. He's here with Bloomberg First Word News.
We'll try this again, David. China's striking back at the United States. Beijing is freezing port visits by U.S. warships and will sanction some American rights organizations. That's after threatening to retaliate for President Trump's decision to sign the bill backing Hong Kong protesters. The World Trade Organization's appeals panel will cease to function starting December 11th, when one of its 3 remaining members steps down. The appellate body upholds, modifies, or reverses WTO rulings, the most important function of the Geneva-based trade organization. The U.S. is blocking new appointments to the panel on White House claims that the WTO has overstepped its mandate and infringes on American sovereignty. As we've been reporting, in Germany, Chancellor Angela Merkel's party is playing hardball. The Christian Democrats have told the Social Democrats there will be no renegotiation of the terms of their alliance, and they can quit the governing coalition if they can't accept that. The Social Democrats have picked new leaders who say they will demand policy changes. Democratic presidential candidate Joe Biden is trying to breathe new life into his campaign in Iowa. It's a place where he struggled despite leading the field in most national polls. Biden kicked off an 8-day bus tour this weekend. The Iowa caucuses on February 3rd are the first test for the Democratic field. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Still ahead, President Trump said he's imposing tariffs on steel imports from Brazil and Argentina, and U.S. steel stock shoots up on the news. It's our Stock of the Hour. That's next. And this is Balance of Power on Bloomberg Television and on radio. From New York, this is Balance of Power on Bloomberg Television and Radio. I'm David Westin. This week, the impeachment probe is moving toward the House. The Intelligence Committee will release its report while the Judiciary Committee begins formal hearings on a possible bill of impeachment against President Trump. For more insight into the political implications, we welcome now Christina Greer. She is Associate Professor of Political Science at Fordham University. And from Philadelphia, the Reverend Joe Watkins, Senior Advisor for Causeway Strategies and a former aide to President George Herbert Walker Bush. So, Christina, let me start with you. At this point, I watched sort of the weekend programs. There was almost a consensus this impeachment thing is not working out for the Democrats. Do you think that's harsh?
No,
I don't know if it's not necessarily working out. I mean, I think the Democrats knew that the president wasn't going to come before them and speak. I think that they're trying to figure out a strategy. Obviously, with the media cycle, there's a conversation about pizzazz. But, Representative Schiff and now Representative Nadler are essentially going through a methodical case to try and lay out the case for impeachment.
A methodical case, but do they need to get off the stage in order to give some of the Democratic candidates for president an opportunity to have the stage before the caucus and the primaries?
Well, I think we're in a complicated time where we have to do both. We have to walk and chew gum. I mean, I think many Democrats feel like this is a constitutional crisis, and so the impeachment process needs to go forward, whether people agree with it or not. There's certain red flags that have been, I would say, excavated in the past few months. And so even though there's a lot of division and there's a lot of tension even within the Democratic Party as to whether or not you focus just on Ukraine or you go all the way back to possibly 2017 and consistently lay out the case, based on what the framers intended, I think this is a process that the Democrats feel needs to happen.
Joe, explain politically now how important the impeachment process is or is not to the White House. And most particularly, are they much more focused on the economy?
The White House is much more focused on the economy. They know that's what moves numbers. And they also know that the impeachment hearings right now are working to their benefit. If anything, while Representatives Nadler and Schiff are certainly going to be methodical about how they go about doing this, the reality is that the president's poll numbers are only getting stronger. Republicans are more firmly behind the president than ever before. His poll numbers show that in some instances has over 90% approval with Republicans. And likewise, as long as those numbers stay in place, the Senate is not going to move against the president. You won't find Republicans, as well as in the Senate as well as in the House, making any overt moves against the president. They'll be supportive of the president throughout this process. And on the Senate side, they will, once it comes to the Senate, they will not vote to convict the president. So they will not remove the president. And the president will probably be strengthened by this, certainly with his base and maybe by some Americans in the middle who he may be able to convince that this has been just an unfair witch hunt most of the time. Although Schiff and Nadler have been very methodical and thoughtful in the way they've gone about prosecuting this case.
We're talking with Christina Greer and Joe Watkins as our political panel. So, Christina, you heard Joe there referred to the center, the middle, what happens with them. The president clearly has the Republicans behind him. The question is, what about the rest of the people? And do you read anything in fact that the economy is doing quite well by most objective criteria? At the same time, his approval rating is still around 42%. It should be higher than that. Does that suggest there's some other stuff going on?
Well, I mean, there are a multitude of factors. One, we do know that people go to the polls based on pocketbook issues. So how do I personally feel my life is going? But we also know that there are two different things. There's the economy and there's how you feel about your own personal income. And we are seeing slight cracks in the foundation. 2018 midterms showed us that, where there are a lot of Americans who aren't necessarily feeling like their companies, their corporations are doing as well as the president promised. So we'll see if he is reprimanded or punished in 2020 at the polls. We still have quite a few months to see if this economic stronghold holds for a lot of people individually. I do think that the people in the middle, though, there's sort of two things. One, there's the economic track, and then there are also people who are very uncomfortable with either the president's rhetoric, what's going on at the border, sort of some of the moral issues, but realistically, Americans have tended in the past to vote on pocketbook issues.
Well, Joe, that's exactly where it's going. Might this election conceivably be a little different than the past? Obviously, people care about pocketbook, but is that being suppressed to some extent because there are some people still are not quite comfortable with the way, let me put it, the president presents himself?
Well, clearly, there are some people who may not like the way in which the president presents himself. They do not like the rhetoric. They may not like the tone. But clearly, it resonates with his base. And if you look at the numbers as it relates to small business owners, the most recent poll I saw shows that 60% of small business owners want to see him be reelected. They like what's happening with the economy. They don't want to see any kind of a change. I think they're frightened at the prospect of a Bernie Sanders or Elizabeth Warren trying to upend, change what's happening with the economy, and that only further strengthens President Trump. So as long as the economy is strong and you have what looks like a strong Black Friday and a strong, maybe even a stronger Cyber Monday, those are going to help President Trump in the long term.
Christina, let's turn to the other side of it now, the Democrats running for president. We have national polls that indicate that Joe Biden, the former vice president, is doing quite well. But in Iowa, not so much. He's really behind by a good margin. He's going to have this bus tour and things like that. Can he turn that around in Iowa? And how well does he need to do in Iowa?
Well, keep in mind, Bill Clinton did not win Iowa. Bill Clinton came in second place in New Hampshire. Granted, that was quite some time ago, but I think Joe Biden and his folks have pretty much realized that Iowa's not for them, right? I mean, we see Pete Buttigieg is doing very well for now, at least. Keep in mind, Iowa's in February, so there's a lot that can change. I think Joe Biden is really putting a lot of his eggs in the South Carolina basket. He just doesn't want to have an embarrassing show in Iowa. That's why he's going on this 10-county bus tour to really try and connect with voters. But we see, from his polling numbers, but also his fundraising numbers, he's having a really rough time in Iowa and New Hampshire.
So, Joe, what would be embarrassing? Is fourth place embarrassing for the vice president?
Yeah, it'd be very, very hard for the vice president to stomach a fourth-place finish in Iowa. He needs, like any other candidate that wants to continue to raise money and have momentum, he needs to have a strong finish, a first or second-place finish in Iowa, and that's not nearly guaranteed. He's got to be very careful on this swing that he's making through Iowa over the next 7 or 8 days to not have a lot of gaffes, to sound like he's on top of it, to sound like he can certainly be somebody to contest President Trump should he be the nominee in 2020. But that means he's got to really work hard and really build confidence among Iowa Democrats, and I think that's a tall order right now.
Okay, thanks so much to our political panel, Christina Greer and Joe Watkins. And a reminder, Michael Bloomberg is the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. And now, for Bloomberg First Word News, we're going to go to Mark Crumpton.
David, President Trump's reimposing tariffs on steel and aluminum from Brazil and Argentina. The president tweeted that both countries have been presiding over a massive devaluation of their currencies. And that, he said, is not good for American farmers. The president also again called on the Federal Reserve to lower interest rates. Billionaire and Democratic presidential candidate Tom Steyer has purchased the website domain for President Trump's 2020 campaign slogan. KeepAmericaGreat.com directs visitors to purchase anti-Trump bumper stickers. The president's been known to swipe website domains from rivals, preventing them from using the URLs. The World Trade Organization says the European Union has not complied with an order to end illegal subsidies for Airbus. A compliance panel ruled that the EU had not taken sufficient steps to end the harm to Airbus rival Boeing. That's what prompted the Trump administration to impose tariffs on nearly $7.5 billion worth of EU goods in October. The bloc is expected to appeal. There's a new job in Mark Carney's future. The United Nations says the Bank of England governor has accepted the role of special envoy for climate action and finances. UN Secretary General Antonio Guterres says Carney has taken a pioneering role pushing the climate issue in the financial sector. Carney is due to leave the BOE January 31st, but there's speculation he may be asked to extend his term. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thanks very much, Mark. Coming up, President Trump says America's farmers are hurting because of currency manipulation. What is the plight of the American farmer today, and what do they blame it on? We talk with Tom Halverson. He's Cobank CEO. That's coming up next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Westin. President Trump was up early this morning tweeting about the plight of American farmers, saying Brazil and Argentina have been presiding over a massive devaluation of their currencies, which is not good for our farmers. And then he goes on to give his solution, which is to impose tariffs on steel and aluminum importing from Brazil and Argentina. For the farmers' perspective, we welcome now Tom Halverson. He's CEO of Cobank, which provides loans and financial services to and is owned by the farming sector. He joins us for today's conversation in chief. Great to have you back, Tom.
Thank you very much.
Let's start with the plight of the American farmer, because we read various things about bankruptcies and people going out of the business and think that. Where is the U.S. farmer today?
I think it's quite a varied picture. I mean, we are in a much softer position for the agricultural sector than we were 5 or 6 years ago. You could make the case that we're probably past the worst and that net farm income will be higher this year than it was last year by a little bit. But the source of the cash flow is indicative of the softness, which is to say somewhere in the vicinity of 25% to a third of that net farm income in 2019 will come in from transfer payments in various forms from the government. And as I've said, speaking to you in the past, every farmer would much rather sell their product into an active and successful market to make a living rather than rely on transfer payments.
And one thing we read, there's a piece in the Bloomberg saying this, but I've read it elsewhere as well. When you look at some of the subsidies that are being done right now in connection with the U.S.-China trade strife, in fact, they tend to go disproportionately to the big guys. It doesn't trickle down for the most part to the smaller farmers.
I think part of the problem, as I've said before, is it's a rather blunt instrument. If you were selling into a market, that creates one set of results. Trying to sort of smear billions of dollars across a large sector of the economy and get to equitable results is a very complicated and difficult thing to do. The fact that larger producers get more is not dissimilar to the fact that larger producers get more in the marketplace as well. That's just the way that the marketplace is differentiated. It's not different in agriculture than it is in other sectors of the economy where the big people predominate in terms of volume. The smaller people, are by definition smaller and get less of it.
Tom, as you say, it's not a monolith, the farming community. But if you can generalize, if you're a farmer in America and you're feeling it being pretty tight right now, what do you attribute that to? Who do you blame? What do you blame?
Well, that's a great question. And if you ask a bunch of farmers, you're going to get a quite varied and differentiated set of answers, depending on their geography, their political predispositions. People vote on lots of issues. They don't just vote on, their pocketbook, although some do. But their explanation of the pocketbook results that they're experiencing can be quite different. So you could ask one farmer and say, the tariff story, who do you hold responsible? And they might say, well, the president. And you ask another farmer and they might say, the Chinese. You ask them, are you willing to wait as we duke it out in this trade war for a good result? And a lot of them will say, absolutely, I trust the president and they're doing the right thing and I will support them, even though in the short term that costs me a lot of money. Other people might have a different view. So I'm very reluctant to be drawn into, portraying any portion of our customer base as monolithically of this view or that. It's really quite varied.
We're talking with Tom Halverson. He's the CEO of Cobank. When a farmer recognizes they're not a monolith, but when a farmer wakes up this morning and sees the president say, we're going to impose tariffs on steel and aluminum from Brazil and Argentina, and that's going to help the farmers, can they connect those dots? Because I'm going to say when I first read it, I wasn't sure how the one relates to the other.
On the one hand, I would say that farmers tend to be way above normal in the population in terms of understanding international trade because they are so dependent on it for their livelihood. They tend to pay attention to what's going on in overseas markets where their products get sold. But I think a lot of people would know and understand that the foreign exchange effects with Brazil and Argentina have more to do with the fact that those economies are suffering and underperforming, and their foreign currency position is more a function of that than it is their intention to do anything with respect to agricultural markets. The reality of the pain and suffering economically that U.S. farmers are secondarily experiencing at the hands of Brazil and Argentina is predominantly caused by the fact of the trade war, which means that the Chinese were not exporting agricultural products that we were exporting to China before. That's created an opportunity for people like Brazil and Argentina to fill that market. And because their economies are not performing well and their foreign exchange rate is lower, that just gives them a further tailwind to take market share from us in agricultural commodities.
So as you suggest, the United States, is not exporting soybeans to China. Brazil is instead. They're stepping in. This has gone on longer than I think a lot of people, including the President of the United States, anticipated that it would. At what point do those trading relationships really get etched in so it's hard to reverse them once this is resolved?
Well, I think we are already well into the phase where you can't just flip a light switch and go back to the status quo ante before all of this began, right? You don't build market share or customer relationships for 25 years and then have this result go on for 2 or 3 years and then have them come right back. We all have to hope and believe and trust that a decent trading arrangement will be put in place and that we'll have to go back and vigorously compete to reestablish markets that American farmers and the American agricultural complex worked for a generation to build up. I have a lot of confidence in their skills and capabilities in that regard, but it's not just going to, fall back easily.
You know well, in other business sectors, when there's real strife, there's real pressure put on this business sector, there tends to be consolidation.
Yes.
Some people sell out in their consolidation. Are we seeing that in the farming community right now? Will the profile of the American farmer be different at the end of this strife than at the beginning?
I think the answer is yes. There's always cyclical versus structural factors. So the long-term structural aggregation and consolidation of U.S. production agriculture has been going on all of my lifetime. That would have continued anyway. These cyclical factors just intensify those pressures, as you suggest. And farming is one of those industries where the producer tends to be asset rich but cash flow poor, right? They've got a lot of land, they got a lot of equipment, but right now what they're having is cash flow difficulties, and that results in the people who are in the lower quartile, by whatever metric, having to do things. Some of them will go bankrupt. Bankruptcies are rising. But the good news is asset values are holding pretty steady. Land values are holding steady. Interest rates are very low, so the capital cost of carrying all your assets is not out of control. It's really a cash flow stress caused by low commodity prices and an inability to sell those products for the price you could 3 or 4 years ago. And that will absolutely accelerate that long-term structural trend of consolidation, whether we like it or don't like it.
We're going to have more with Tom Halverson. He's the CEO of Cobank. And he's going to be talking about the USMCA and the growing divide between the rural and the urban economies across the country. That's coming up in our second Balance of Power hour on Bloomberg Radio. Coming up here, when a presidential candidate like Joe Biden wants to jumpstart his campaign in Iowa, what does he do? He gets a bus. We take a look at the 8-day bus tour planned ahead. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Fire up the engine. Former Vice President Joe Biden is looking to rejuvenate his presidential campaign in Iowa with an 8-day bus tour focusing on rural areas and traveling with Tom Vilsack. He's the popular former governor there, as well as the former agriculture secretary under President Obama. For more, let's welcome Wendy Benjaminson. She's politics editor for Bloomberg News. Wendy, welcome. So Joe Biden is behind, I think, in most of the polls I've seen in Iowa. Is this something that can get him going again?
It could. We have to sort of wait and see. It's only the third day of the bus tour. So he is still the solid front runner nationally. And what he said over the weekend on the campaign trail is that he's hoping this bus tour will get him back in the lead in Iowa, where he started out. He promised to spend a lot of time there, then he didn't. And he spent a lot of time raising money and a lot of time elsewhere. And now he's trying to go back to Iowa and say, in the next 90 days, or 60 days, please consider me.
So, Wendy, I just have to ask you about the name of the bus tour. No malarkey, exclamation point. I mean, I don't think I've heard that word malarkey since I was a young boy.
Well, I haven't either since I was young, and there are apparently some people out there who have never heard the word and are sort of wondering what no malarkey means, but I guess it beats the, more crude alternative.
Well, or is it an alternative to the Straight Talk Express? John McCain's bus up in New Hampshire a long time ago. I mean, he can't take the Straight Talk Express, so no malarkey, I guess, means straight talk, right?
That's what he hopes it means, yes. As he says, facts are a challenging thing sometimes for President Trump, and he's hoping to prove that they are not for him.
So why is Pete Buttigieg doing so well out there in Iowa, in your estimation?
Pete Buttigieg has a very good ground game in Iowa, which is very important. As I think I've said on your show before, people in Iowa expect to meet the presidential candidates or someone who works closely with them. And so Pete Buttigieg has an excellent ground game in Iowa. He's from the Midwest. He sort of speaks to their issues. And I think as people are taking a second and third look at some of the big programs that Warren and Sanders are promoting, and there's more and more questions about how to pay for them, Buttigieg is a moderate alternative where Biden may be seen as sort of old news.
Yeah, now, in fairness, the former vice president is doing very well on national polls, and it appears that part of his strategy is not to embarrass himself in Iowa or New Hampshire, but then really make a stand South Carolina, Nevada, and then, of course, on Super Tuesday. Is that a viable strategy?
It is, and it certainly has been. I mean, a lot of people, get the nomination without winning Iowa. Bill Clinton, for example, didn't win Iowa, and then he won New Hampshire, and he was the comeback kid. That I think it's a good strategy. He has overwhelming support in South Carolina. He does well with Latinos in Nevada. So, yeah, it could work.
We'll know soon enough. Many thanks to Bloomberg News politics editor Wendy Benjamin. Coming up, Balance of Power, the second hour. We're going to have Henrietta Trays with us. This is Bloomberg.